Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. I founded it in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms such as our 21 ES, SPY and ES mean reversion systems. We actually had a couple of those trigger today. We had some last week. And of course our amazing KISS systems. And anyway, it's been about a week since I did a YouTube video. There's been a lot happen in the market since that time. We had a blow-off move in gold and precious metals last Friday. And, we've since had a nice market correction. Warning signs were about a week ago. We had one of our systems short. And we had a bearish symmetry break on the S&P. And, of course, today things really let loose. So we got a lot to discuss. Again, for our standard subscribers to our website, breakpointtrades.com, we've been providing updates every single day. But it's been a week since I did a YouTube video. So let's go and get back to that. Again, it is April 15th, tax day. And this is the comprehensive newsletter from Breakpoint Trades. Again, we got a lot to discuss here. This is our backend recorder for our website, standard web page format for our subscribers, which if you're just a YouTube viewer, you should check that out. But let me go ahead and get that recording started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, April 15th newsletter, tax day. Tonight's newsletter, as you can see, divided into 6 major sections. Again, got a lot to discuss. Before we get into the general market, we're going to discuss some of these mechanical trading systems. So the systems have been very active lately, and we've had some of these mean reversion systems been triggering. We had some really nice trades close out last week. In fact, a couple longs closed out last Thursday, which were very timely before this nice market sell-off. We had a couple systems trigger today, so I'm going to go over all that. Then I'll go and move to the general market analysis. We'll look at the Dow, the S&P 500, the Nasdaq, the Russell 2000. Then we'll look at some indicators such as the VIX, the NYMO, etc. We'll also look at the bond market. TLT, 20-year bonds, 10-year treasury yield, high-yield corporate. We'll look at a few sectors. We'll look at the U.S. dollar, cryptocurrencies, commodities, precious metals. We'll follow up on some ideas, trade ideas, but I didn't add any new ideas in this volatility. Like I said, today, market bloody red. All right. In the morning, the market started off okay. In fact, it had a nice gap up in the cash markets. The S&P 500 was trading up over 40 points in early morning, about the first half an hour or so of the cash market trading. But then price quickly stalled at a resistance zone that we had posted. It sold off 110 S&P points from those highs. So one hell of a move down. Okay, so 110 point reversal from the morning highs to the afternoon lows. Okay. For the day, the S&P 500 lost 1.2%. The Nasdaq lost 1.66%, so really took it on the chin. The Dow lost 0.65%. And small caps, which have been weaker, lost 1.44%. Remember, the small caps, I've been labeling that as a completed rising wedge pattern for the last couple weeks, and that has been playing out if you took a short there, such as buying TZA and you've held on to it. Also, out of the 21 market sectors we follow, 20 out of 21 were down today. Only the banks were slightly up. Also, a pretty good day for the 10-year treasury yield, which gained 2.9%. Correspondingly, strong drop in the bonds, the TLT 20-year bonds. U.S. dollar was up slightly. Precious metals have been wild. We saw a blow-off last Friday morning, which technically looks more complete to me. All right, but that said, we did see gold and silver have nice gains, rebounds today, particularly because of the uncertainty. Again, I still favor that we put in a high at Friday, but we'll just have to remain to be seen. One thing I noted today, the mining stocks greatly underperformed, and they tend to lead. So I think today's bounce in gold could get sold soon. All right. Again, longer term, I think it's really good, but that area may be due for consolidation over the next few months. Okay. You just have to decide if you're going to hold through that or you want to take profits and then buy on a dip. Again, as far as the markets, my concern coming into this week was that while, first off, the bulls they were hanging on were the Qs. They were holding up the best. they had a perfect triangle pattern. They haven't broken symmetry. They still remain in an obvious coil pattern. The problem is you had bearish symmetry breaks on all other three major indexes. On the S&P, which occurred last week, you had it on the Dow Jones and IWM. So you had 3 out of 4 of the indexes had bearish symmetry breaks. So what were the odds that the Qs were magically going to take the market up? Obviously that didn't happen. And today, the Qs finally broke their symmetry. Okay. A couple other things, guys. OPEX, that's options expiration, is on Friday. That could be a key pivotal thing. Perhaps the S&P or ES is targeting that 5,000 area. It's possible we could move down to that area and then we have a pretty good rally from there. We do have earnings season starting soon, and usually the market kind of holds up into earnings season, so that's in the back of my mind. Short term, the fear and greed index is now at 41. So that's actually the lowest reading since November. So a lot of fear out there short term. You can view that as a contrarian indicator. Over a week ago, the NYSI 9 EMA system that I've been showing gave us objective short signal, and that has played out if you stayed patient and you took that trade. On the VIX is now outside its Bollinger Bands a second day in a row, so we're going to keep an eye on that. And on the mean reversion systems, we had first entries triggered on both SPY and EOS futures on a couple of the systems. Okay, I'll go over that in just a minute here. Here's the key news items this week. Fed Chair Powell speaks on Tuesday, 1:15. Approximately 10% of the S&P 500 companies report earnings this week. We have 13 Fed speakers this week, and of course, geopolitical issues, which could move the market. Next, before we go to the major index analysis, let's talk about these systems. So let's talk about the mean reversion systems. Again, at Breakpoint Trades, we have 21 mean reversion systems that I developed, and we've had these on the site for years. Here's the list of them: 13 longs, different longs, 9 systems that look for shorts. Okay, so a lot of websites out there have 1 or 2 systems. We got 21 mean reversion systems. I kind of took the approach of, finding as many of these systems as possible to find as many trade opportunities. So today, we actually had a couple of these mean reversion system trigger first entry longs. We had the QEBTS trigger on SPY, and we had the pullback trend trigger on SPY and ES. Next, let's look at some of the recent mean reversion systems. So if you look at these, a couple weeks ago, a week and a half ago on SPY, we had the trend pullback triggered along there. It sold a couple days later for a winner, like locked in profits. The system then re-entered again today, so it has a new entry. Again, it's possible. Sometimes these systems can be early. Sometimes they require 2 or 3 entries. There's 3 entries maximum, but it did re-enter today. Again, it had recently closed out a winning trade there. And a few weeks ago, we had the exhaustion short trigger on SPY, which is a very rare event. And that was also giving us an early warning sign that the market may be a bit toppy. Those exhaustion shorts that trigger in an uptrend, again, are very tough conditions to trigger. They're things like, price staying above the 20-day moving average for 100 consecutive days, stuff like that. It rarely occurs. There's only been 9 occurrences of this exhaustion short since 1995. So it's rare. That was a nice winning trade, but it also gave us a little early warning on the market, didn't it? And also, last Thursday, we had 2 open long systems on ES futures. We had the long pullback and the long trend Momo. Both closed out last Friday. Man, those were timely exits, weren't they? They were winning trades. They exited just before Friday's sell-off, and then, of course, we had the big sell-off today. Next, image number 4. So here's the systems that triggered today. Like I showed above, on the trend pullback for SPY, that triggered a new first entry. Today, remember, the system was long over a week ago, which closed out early last week. It went back long today. Also on SPY, the QEBTS triggered a first entry as well. What are the trade statistics here? I don't have those pulled up here at the moment, but On the trend pullback, it's around 80% winning trades, and QEBTS, it's similar. For the ES futures, we had the QEBTS triggered our first entry as well. So I sent out trade notifications as well as SMS text notifications to our paid subscribers today for these systems. So paid subscribers, those of you who follow the systems would have taken these trades. And if you're just looking at YouTube, that's a reason to become a subscriber. Next. Image number 5. Here's the trade list. These are the official trades that we've sent out on the website for these mean reversion systems. So 2024, we had about 32 mean reversion system trades. This year, so far, we're on number 8. There hasn't been that many mean reversion systems this year because the market's been pretty much in a straight up fashion since late October. But finally, we've been getting a little volatility here, so some of these have started triggering. You can see we had a short, and otherwise we've had longs. But right now we have 2 open subsystems for SPY, QEBTS, and trend pullback. Again, they're their own systems. They're mutually exclusive to each other. So what I do is, they could these took the trade the same day today, but they may have different exits. One may exit days later, one may exit better, one may exit worse. We follow each system individually. Next, image number 6. Here's the official trades for the ES system, for the mean reversion systems. You can see there's been 7. Today we have open the QEBTS. You could see last year, 2023, we had 40 trades, which captured about 1,142 points on the ES futures. And in 2022, during the bear market, we had almost 100 trades. So these mean reversion systems do better in volatility, bear markets. When you have straight up bull markets, they don't trigger that much because that's the nature of mean reversion systems. They need pullbacks and uptrends, bounces and downtrends to trigger their trades. That's how mean reversion are. So anyway, otherwise these have been nicely profitable, and congrats for those of you who've been taking these trades. And of course, this year what has really killed it has been the KISS trend systems, and a lot of those have started closing out. In fact, there's been a lot of those that have went to cash over the last couple weeks. On the website, on the KISS tables, all the SPY instruments, SPY, SSO, UPRO, the S&P index, all went to cash on Friday. Pretty timely. Next. All right, back to the general market newsletter. Here's the index sector table, what transpired today. You can see bloody red here. Big decline on the indexes. The Dow held up the best, obviously, but it's been the weakest for the last several weeks. S&P down 1.2%, Nasdaq down almost 1.8%, Russell down 1.5%. Out of the 21 market sectors, everything down except banks. Currency-wise, US dollar up 0.2% today. Cryptocurrencies have been weak. They were selling off on the weekend, and those charts still look quite bearish to me. One thing to note on Bitcoin, you have the halving event coming. That's when it becomes basically twice as hard to create a new Bitcoin. And I think that's really going to negatively affect some of those mining stocks that exist to mine Bitcoin. As far as, instead of stocks that just hold Bitcoin. And as far as commodities, most of the commodities had an update here. Exception was sugar, which was down. Nice rally, like I stated, in gold today, up 1.8%. But the glaring thing here is GDX, the miners were down, and they tend to lead. Silver followed through today, up 3%. Both of these are still well off of Friday's highs, which I still think could be some sort of top, unless we continue to power up here. And in the bond market, nice decline in the TLT 20-year bonds today. Nice rally in the 10-year and 30-year Treasury yields, kind of spooking the market with those rising rates. Next, item number 8 shows the economic news calendar, which I already went over. OPEC's on Friday. Powell speaking tomorrow. 13 Fed governors speaking this week. A lot of other news. And, of course, earnings season. All right, guys, let's go and jump to these index charts. First chart below, item number 9, is the weekly snapshot of the 5 key major indexes. I like to show this. Remember, over the last couple weeks, I've been talking about the Dow here. Last week, I said it had leaked oil and had lost that 9-week EMA. That had been support since the October low. I said that was a warning on the market. You can see so far that's been the case. Nice correction. It's well below the middle Bollinger Bands now. And on the S&P, closed just a point or so below the 9-week EMA last week, slicing through it here now. Middle Bollinger Bands below. Nasdaq losing that 9-week EMA. And of course, this Russell's been selling off. Next, chart 10, here's a daily chart of the Dow itself. Like I stated, the Dow and the Russell 2000 have been weaker. The Dow lost this support a couple weeks ago of this channel and 20-day moving average and 50-day moving average all in the same day there. You see the 20-day moving average in blue, 50-day moving average in red. And you had a clear symmetry break. What do I mean by symmetry break? That pullback there was the largest pullback in the uptrend from the October lows. When you get that, odds favor lower high bounce. Anyway, it wasn't much of a bounce. Been selling off. The next support demand zone is right here. That could be a target immediately. Maybe we bounce from there. But ultimately, if this correction ends up being deeper, we could, possibly go down to the 200-day moving average. Remember, we've had this MACD divergence building. And the problem is that MACD divergence, it was closer to zero. When it gets close to zero, that's when it tends to work out. I'll show you some, like for example, here's a little education. You had some MACD divergence back here in late December. See that? But all you got was more of a sideways pullback. Whenever the MACD, if your divergences, when you have your MACD divergence, if it's too far above zero, most often it doesn't give you much of a pullback. You're still in a strong trend. It's when it recycles closer to zero and you have that divergence, that's when you get your unwinding. That's when the market's vulnerable, and you can see that playing out now. Also, the 60 stochastic, which was embedded above 80, firmly lost that area a couple weeks ago as well. Next, chart 11, here's the weekly view of the Dow. Again, remember I stated that on a correction, losing that 9 EMA, it may be on course to retest that 37,000 area, which was previous resistance, now major support. You can see it's on its way. Next, chart 12, moving on to the S&P 500 charts. Here's the daily S&P that we've been showing. Remember, we had that little tight coil. We busted that last week, and we broke symmetry last week. Again, the largest rally in the uptrend off the October lows was about 130 points. So you needed a pullback larger than 130 points off that 52.65 high to break symmetry, and you got that last Friday. And that ended up being a telling sign for a sell-off coming into this week, and you can see today's big sell-off down almost 62 points. We closed right around the 50-day moving average last Friday. A lot of folks thought we could rally off that 50-day moving average, but we had a symmetry break, and that ended up basically giving the bear case, and we broke down. Also, you can see the MACD divergence that was developing. Now the MACD is closer to zero. The 60 stochastic, which has been embedded above 80 forever, finally below it now. Next. Chart 13, here's the daily KISS system. So this closed out today. Remember that stop was at 50.82. That was hit today. It was actually a very good trade for the KISS system. It went long there on October 31st. Held that whole way. Again, it's never going to catch the exact top or the bottom, but definitely it caught a good 90% of that uptrend move and is now back in cash. That's the beauty of the KISS system. It gives you those exits. It gives you an exit plan. It gives you a protection like having an insurance policy. Unlike those brokers, traditional brokers like A.G. Edwards, Edward Jones, which you cannot stand, that have no exit plan. All they do is buy, hold. They never will exit anything for you. They'll let you go through bear markets. The KISS system won't let that happen. Next. Now to clear up some confusion, the KISS S&P system I generally show in the newsletters is slightly different from the one on the KISS tables on the website. So here's the one from the KISS tables on the website. This actually had a better exit. It exited on Friday. Those of you who follow our KISS systems, you would have been alerted on this on Friday after the close whenever the updates go out. And so this closed out on Friday. So got a better exit than the typical one I show in the newsletter above. But again, that said, this one went long later. It went long in early November, whereas the other one went long on October 31st. This one was long. It exited there in early January. It then went back long a week later. So, whereas the other one stayed put the entire time. The other one has better stats, which is why I typically show it, but this is still a very good system, as you can see. Nice exit there on Friday. Next. Chart number 15, here's the 4 time frames. Again, the problem is we were leaking oil. We were below the ATR on the daily. Finally, last Friday, we lost that. So that was a warning, and then big sell-off today. We also smashed right through the support cycle. We were below the ATR on the half day, which we lost. We blew through these support cycles on all these time frames. Next. Chart number 16, here's a half-day chart. After breaking that uptrend line, we've been forming lower highs. Nice sell-off today. Now, if we get a follow-through with today's sell-off, we got an obvious open gap here, which would be a magnet down to right around that 5,000 area. That's a nice round number. These open gaps on the indexes like to get filled, so that could be the next target. All right. Otherwise, these boxes below are the next demand zones, which could offer some support. But for now, that open gap would be my immediate target if we get more downside right from here without a bounce. Next, chart number 17. Here's that 2-hour chart. Remember last week we were showing price stalling at the supply zone up there. Well, that obviously played out. Again, you can see that open. We filled one open gap today from early March. And the next open gap is from late February, which is still below, down to around 49.85. Next, chart number 18. Here's a 2-hour chart. Chart had been showing since last week. So this shows various wave counts. Don't get bogged down into that. Under a very bearish view, price could still unfold in this, 3, which we'd be in now, then a 4, then a 5 of C, maybe end up down in this range. That would take price down to around filling this open gap down here from February, down around that 5,000 area. So we'll see if that ends up playing out. Next, chart number 19, here's a 60-minute chart. You can see how we busted right through that channel. Again, you can see that we filled the one gap. We have that gap below, which I just discussed. Next, chart number 20, here's the triple Qs KISS system. Now, this one went long on October 31st. It is not closed out yet, but it's really close to that smart trailing stop at 429.17. Again, I like to round those. You could round it to 429 or 429.20, whatever fits your style. Also, the one on the KISS tables is still long as well. Again, even if it stops out here, guys, it's had an excellent long trade from that entry down there. It did its job well. Next, chart number 21, here's the 4 time frames. Just like on the S&P, price selling right through these support cycles. We do have a support cycle in the 130 minutes, so we'll see if we get a little bounce from there or not. The daily Qs are still holding that ATR for now, just barely. Next, chart number 22, here's the triple Qs daily chart. Remember, on our weekend newsletter, we were talking about this coil formation. So the bull's hope was this coil was going to hold up and we're going to get one more attempt. The problem is that, like I already stated, the S&P 500, the Dow, and the Russell had already broken their symmetries. So what was the odds that the Qs were going to be the lone wolf to hold everything up? Usually that never happens, and instead it broke down. And in fact, today it broke symmetry. It obviously broke the coil to the downside. Remember, the largest pullback has been 17.6 points. So to break symmetry, you need to move below about 431.70. Well, clearly we broke that today. Price closed at 431. You can also see the moving average ribbon starting to pinch, starting to curl down a little bit. Also, guys, here's another thing. Whenever the moving averages start to flatten out a little bit like this, that's when you're more vulnerable to a bigger pullback. When they're kind of strongly sloping up like back here, you only tend to get shallow pullbacks. Next, chart 23. Here's the half-day chart. Shows you essentially the same thing. Like I said, guys, it's a very simple guide. You notice the moving averages here, the 9, the 20, the 50. When they have these strong upward slopes, price generally rockets up. But whenever these moving averages start to flatten out like this is when you're more vulnerable. And so today we had a clear symmetry break. You have the 200 moving average down here in green. That could be maybe an immediate target. There's also an open gap here that I don't have highlighted, but you can see it back here on February 20th, right around that 425. I'd say that's probably one of the immediate targets would be filling that gap. Chart 24, here's 2-hour chart. You can see the nice coil breakdown today. Chart 25, here's that other option we've been showing where you could get this deeper pullback, but then yet another rally. That is still a valid option, but I'm not going to go into that right now. So just something to monitor. Next, chart 26, here's the small caps IWM, and this has been absolutely picture perfect. Remember, you had just an absolute textbook rising wedge here, A, B, C, D, E. You had 5 waves. These wedge patterns are always 5 waves, so it was absolutely textbook. I stated over a week ago that this looked completed, and hopefully you guys listened to me and paid attention because it has been playing out. To me now, the targets to the downside could be the 200-day moving average and maybe this demand zone. You could see the MACD, that nice MACD divergence that accompanied the wedge, and notice how it had recycled back near zero, so that's what made that wedge more powerful. Next, chart 27, here's the 2-hour view shown from the weekend. You can see price mashing down, slightly closing below that demand zone. We'll see what this does tomorrow. Next, let's look at some of these indicators. Here's the VIX. So the VIX closed outside its Bollinger Bands again. It was outside its Bollinger Bands on Friday. We'll now watch for when this closes back inside the bands. Pretty good move here. Chart 29, here's the weekly chart. Remember, I've been showing the VIX building this longer term base, and that's been playing out over the last couple weeks, starting to move up. Next, chart 30, here's the percentage of stocks in the S&P 500 that are above their 50-day moving average. I showed this over a week ago as a big warning in my weekend newsletter. You can see the lower high here on the percentage of stocks, while the S&P made a higher high. And then last week, this sold off very strongly before the S&P sold off. So it was given kind of an early warning. And you can see now, percentage of stocks have now fallen to 36%. Just a couple weeks ago, they were up at 85%. So quite the haircut there. And some of these stocks behind the scenes. Next, chart 31, here's the NYSI 9EMA crossover system. Guys, this trade so far has given an excellent trade. Remember, a few weeks ago I said I was looking for a cross of this, and I said I thought that would be a good sell signal. You got it right here, and it confirmed. If you were patient, bounced a little bit from there, and boom, and that trade is now playing out. That was a very objective short trade. Just like that long trade back in early November was a very objective long entry. Next, chart 32, here's the S&P with the NIMO McClellan oscillator down here. Short term, we are getting quite oversold. The McClellan oscillator is now closed below its lower Bollinger Bands 2 consecutive days. Again, sometimes in strong sell-offs, this can go below 3 or 4 days, but that's usually the limit. So that's showing us that we could get an oversold bounce here at any time. Next, chart 33, here's the NYA. This is that breadth thrust indicator. It's the NYADV, NYTOT ratio. So we had a confirmed breadth thrust buy signal back in early November, right, by the rules. But those breadth thrust signals are quite rare, okay, if you Google that. But besides that, you can also use this as kind of a mean reversion long system whenever this gets oversold. And you can see this is oversold now, so could be triggering a mean reversion bounce soon. Next, moving on to the bond market, here's high yield corporate. This has been leaking oil, and the market tends to follow this, so this was another warning. You can see the little rising wedge here, which broke down a couple weeks ago. It's now firmly below its 50-day moving average. The next support zone is down here, which likely the 200-day moving average will run into it by the time it gets to there. Next, Driver 35, here's the 10-year treasury yield. Been moving up nicely. Remember, I've been postulating that move up in a wave C. Again, to me, this still looks like little wave 3 of C. So this still doesn't look complete. Otherwise, it's still holding this channel. That's not helping the market. They're moving up in rates. Driver 36, here's TLT 20-year bonds. Been selling off logically in the same pattern, inverse pattern, downtrend channel. It's approaching the lower portion of the channel. We'll see if that offers some support. Next, Driver 37, here's the yield curve. Haven't shown this in a while, so it's been moving up here a little bit. Still a ways to go before it becomes uninverted, but we want to watch this, guys, because when it goes back above 1 and is no longer inverted, that's typically when you get your official recessions that start. So we want to keep an eye on that this year. Next, moving on to some of these sectors. Here's XLK Technology breaking this little sideways triangle to the downside today. Again, you could see how the moving average ribbons had come together here. You could see it on the ribbon. That's when you get your vulnerability, especially since the moving averages had starting to flatten out. So nice breakdown today. Driver 39, here's semiconductors losing that 50-day moving average today. Driver 40, XLC Communications strongly losing that support, closing right near its 50-day moving average. Remember, this contains a lot of those FANG type stocks. Driver 41, here's the banks. Been selling off since it filled that open gap a couple weeks ago. It's down around the 50-day moving average now. Driver 42, here's the transports. Been leaking oil as well. Now it's coming back to this previous resistance, now potentially support. And Driver 43, XLE Energy. We had that spike last week. RSI divergence up there. The energy stocks had a heck of a move. To me, it looked overdone. And now they're getting a nice pullback nearing the 20-day moving average. Moving on. Driver 44, here's US dollar. Up today slightly. The next resistance area is marked above. A nice breakout from here. Driver 45, here's the weekly chart. Driver 46, here's the weekly Japanese yen. So it is broken down from that descending triangle I showed a couple weeks ago. Moving on to Bitcoin, Driver 47, Bitcoin broke down last week from that coil. Bounced a little bit on here and then selling off today. Still looks very ugly to me. Driver 48, here's another Bitcoin chart. This is a 4-hour time frame, 240-minute. To me, this looks weak. Got a kind of a support neckline here. A good break of this, it could fall all the way down to the low 50,000 area. There's a big thin zone here, guys. What do I mean by thin zone? So below this area, you see this vertical move here? This really offers no support. So it's basically like an air pocket thin zone. Next, Driver 49, here's Ethereum. Remember, several weeks ago, I labeled that as a wave B, lower high. Well, that played out. It's been moving down in a wave C. Perhaps the target now is the 200-day moving average on Ethereum. The crypto stocks have been getting nailed. Here's Coinbase, losing that area. 50-day moving average would be next support. Driver 51, here's MSTR, also leaking oil. 50-day moving average is below. However, the stocks that have been getting hit the hardest are the miners that mine Bitcoin, such as Mara. Look at this, well below the 200-day moving average now. And next, moving on to commodities. Here's DBC. This is the weekly chart, which is up 0.1% today, still in the confines of its coil. Driver 54, here's crude oil. Unfortunately, stock charts has been having an issue updating some of these commodities. So this is still the close from Friday. You can see it's been stalling at the supply zone. Crude oil was up a little bit today. Let's look at the ETF. So chart 55, here's the tradable ETF, SSO. You can see it was slightly up today. It was off the lows anyway. Hasn't taken out Friday's highs though. Next, chart 56, natural gas, same deal. Hasn't updated as yet, but natural gas was down today. Let's look at the ETF. So here's the tradable ETF, UNG. You can see melting down here, basically retesting those recent lows. Next, chart 58, copper. This is the weekly chart. This had been a very strong commodity. Chart 59, DBA, agriculture. Man, this thing just continues to go up. And here's another thing, guys. Remember I talked about that MACD divergence? Look how far the MACD is above zero. So you have a divergence here, but that typically states that this may not be ready for a major pullback yet. Maybe you get a pullback, but the MACD divergence is so far above zero. Those tend not to produce your big pullbacks yet. You don't think inflation's a problem? Just go to the store. That's what this DBA agriculture is showing. Chart 50 or 60, here's the weekly chart. This cup and handle is more than played out. I was talking about this pattern every day typically in January and February, and this played out beautifully. Next, moving to precious metals, chart 61. Here's GLD, that's the ETF. So this is what I talk about on gold. On Friday, you had that big move up, and to me, that looked like more of a completed pattern. You have a potential 5 of 5. So gold did rally today, but unless it takes out those recent highs, I still think Friday's highs may have been a high. Okay, so we'll see if I'm right or not. Next, chart 62, here's gold. Again, up today, bounced off its 9 EMA, but again, it's still well off those spike highs on Friday at 24.50. So like I said, I still think Friday's spike high might have been a high. Now, what kind of high is it? Perhaps it's just a wave 3, then we get a wave 4 pullback. There's no MACD divergence at those highs. Okay. Otherwise, you can see the stocks via the GDX-GLD ratio are underperforming. Chart 63, there's the weekly chart of gold. Again, it's had a hell of a move. Like I said, bearish seasonality on gold typically kicks in sometime in later April, and then last until July. So we may be seeing that sometime soon. Again, you have to decide what kind of trader you are. My feeling is if gold has some sort of ABC pullback in that time, it's a buying opportunity. Okay, that's my thoughts. You just have to decide what type of trader you are. Are you willing to hold it, or do you want to wait and now buy it on a pullback? Chart 64, there's the bigger picture view. I still think gold will ultimately go up to the 3,000 area over time. It's in the midst of this major wave 3 on the monthly chart. Next, chart 65, silver. Again, this is Friday's close. They still haven't updated it. Silver was up today. Again, on a good correction on silver, this previous breakpoint is now support. Whether it gets down to there or not, we'll see. Next, chart 66, here's the ETF, which is updated for today. Again, you can see it was up, but still well off of Friday's highs. So that's why I state it is possible Friday marked a high. Next, chart 67, here's silver on the weekly. Again, it broke out, as you know, from that bullish ABCDE coil pattern a few weeks ago. Hope you guys played that. Again, like I said, guys, you just have to determine what your time frame is. If you're long term and you could just go away, I think you could hold it. But if you're more about timing, I think soon, it's going to get this ABC pullback. You got a better buying opportunity for your major swing. You just have to decide what is your style or some combination. Chart 68, there's the monthly view of silver. Like I said, it's off those highs. But longer term, this is a major breakout on silver. I think it goes up into the 40s, maybe even test that 50 area over time. But again, that's going to take some time. I view a major pullback in silver as a buying opportunity. As far as some of the silver stocks like AG, which I put out over a month ago, had a nice pop, had a major breakout from this falling wedge. Good pullback here, higher low would be a buying opportunity. Chart 70, here's AG on the daily, again, nice pullback there right to its 9 EMA. So again, these area definitely looks like it's a bit toppy, needs more consolidation. It is holding its 9 EMA for now. Next, looking at gold stocks, here's GDX. Again, this has been leaking oil. You can see the ratio. The moving average ribbon was very wide. This previous breakpoint could now be major support, maybe around the 20-day moving average, and maybe you get another buying opportunity. Chart 72, here's the 60-minute chart. Here I had a little support area to monitor. Got kind of a little rounded top, head and shoulder look forming at the moment. Next, chart 73, here's the BP-GDM gold system. Remember, this gave an excellent buy signal on March 1st. Very timely from the oversold condition. But last week, this got well into the overbought territory. Like I said, you guys need to load up on this stuff back in February, early March. Right now is not the time. Best to wait for a pullback. Chart 74, here's the BP-GDM signals. You can see it's done very well, capturing about 70-80% of the trend overall. Next, let's move on to some of these stocks. Here's NVIDIA. NVIDIA leaking oil today. It's still holding its 50-day moving average today. We want to keep an eye on that. That's obviously important. Next, chart 76, here's NVDD. That's the inverse ETF for NVIDIA. Again, this pattern still looks decent to me if you're long this. Remember, this has been on the watch list. I think you now put a stop right at today's lows. Chart 77, here's AMD. It's been leaking oil, had that bear flag a couple weeks ago. Slight move below this demand zone. Next support levels are below and the 200-day moving average. Next, chart 78, here's Tesla. As you know, they're laying off 10% of their workforce. Stock is selling off again. Chart 79, here's the daily zoomed out view. Again, there's an open gap back here from the January 2023. Perhaps that's the next target over time. Tesla's got a lot of work to do, guys, as you know. Chart 80, here's Microsoft, the big old sell-off today, slicing through this uptrend line, closing a little bit below the 50-day moving average. Chart 81, here's Meta, still holding that 50-day moving average for now. That's the area to watch. Some other setups. Here's Now. We had it as a coil pattern, broke down today. Inverse ETFs that I've had on the watch list for the last couple weeks. These have done well. These actually triggered about 2 weeks ago, guys, when they broke their channels. If you stayed right here, if you stayed patient, you're rewarded. You can see the nice move now, well above the 50-day moving average today. Chart 84, here's SQQQ. Same deal, broke that channel a couple weeks ago. Nice clean break today. Look at the moving average ribbon, how it's pinched and just starting to curl up. Here's chart 85, FNGD. That's the inverse FANG coming off this base. And finally, chart 86, TZA, triple inverse ETF for the small caps. Been coming out of this base. All right, guys, we'll see what happens tonight. Quick check on futures. ES futures are essentially flat right now, and gold futures are up 20. So again, what I'll say about the market today, it was a very ugly close. I know a couple mean reversion systems went long, but I wouldn't be surprised. If we have a bounce here, I think it's short-lived. I still think ultimately come down a little more. So, all right, guys, have a wonderful evening. Thank you for your support. Take care.